what a wild trading week we have had. Actually, a wild trading month. We've had just a back and forth. I'm going to share a little bit with you this week, but man, has it just been, if you've been a ratio trader this month and you are just feeling the sting, don't worry about it, because just about everybody is. The market has gone into, in most markets has just gone vertical. There's been a couple of places where we've been able to eke out a little bit of cash, but overall, most of the traders that I'm talking to and most of the things that I'm seeing, there has been a whole lot of just like give and take. And even in the trend following strategies like the portfolio alerts, we 1,000 pip swing this month. It's just been incredible. And so I'm a little light on stuff to talk about. I'm going to show you some of the markets, but it just, the fact is that there is just not a lot out there that I'm willing to trade. And this is one of those, tests of your discipline as a trader. Are you willing to just sit on your hands? Are you willing just to sit there and do nothing if no trades present themselves? And for somebody who is used to being in multiple markets at one time, to now be sitting around and basically only have one trade out in the market, that's something that I'm just not used to. But it happens from time to time, and we do see these types of things happen. So that's what I want to talk to you about today. And welcome everybody to the Forex Market Preview. My name is Jason Stapleton, and if it's the first time you're joining us, thank you so much. And if you are a returning visitor, not really visitor if you're returning, but if you're returning to us, well then, thank you so much for watching this video. I'm going to try and make it super valuable for you, even though we're a little light. The one trade that we do have setting up right now, it's actually been filled, the order's been filled, is the pattern, the BAT pattern that exists right now on Aussie dollar. So I'm going to start out right there. I'm going to let you just kind of look at it, and then I'm going to identify the pattern for you. We actually had a pattern that we traded right in front of the BAT pattern that exists now, but if this is the termination point, if you know that we're long, you can kind of work backwards from this termination point, and you should be able to see, if you've been with me for any length of time, the BAT pattern that exists right here. Now, what you may not be all that familiar with, and it should complete somewhere, I'm sorry, it's right here. I'm a little long. Right here. And you should be able to see that pattern pretty plainly. I'm going to go ahead and draw the ratios in for you in a minute. But one of the things that you may not have seen, because we did violate X here, the termination point here, is we actually had a Gartley pattern right behind this. Right here to here, and then down here, and then up, and the 127 completed right about here. And I'm going to change the color of this just so that it's easy to see, so that you can differentiate between the two. And, hang on here. Make that orange, boom. And we'll make this orange, boom. So there's the two patterns right there. Now, what you'll see is that the market rallied here, and those of you who understand the requirements for Gartley patterns is that if we violate X, we technically do not have a Gartley pattern anymore. But this is why, and this is, I tell traders, this is the difference between someone who reads a lot of books and knows what a Gartley pattern is and someone who actually trades them all the time. Because we had our stops just above the 106 handle. So you look here, if you look left, and you may not be able to see it on your screen as clearly as I have it on mine, but just at where this resistance line is, that's 159.97. That was the high water mark here of this press. And when we put our stops in above X, we put our stops just above 106, which kept us out of being stopped out of this trade. The market rolled over, ended up hitting both of the targets that we had, the 382 and the 618, and now we've rolled right down into a BAT pattern buy. So we have come off of this trade, and this is something I was sharing with the mastermind group over the past couple of weeks as we've been watching this trade play out. I'm sorry, not the mastermind group, the private client group. My private client group, we meet once a week for about an hour, and I cover the markets, and we talk about everything from trading psychology to trade setups. And we've been watching this trade play out, and we talked a lot about stop placement and why the stops were going there and being above the even handle. And this was a perfect trade example of that, where the market technically violated X and negated the Gartley pattern, but still, because we used good stop placement, we were able to hold on to this trade and make a pretty decent return on it. Now the market's come down in, and we ended up buying our trades up here at the 886. And let me just go ahead and draw that in for you. This BAT pattern completes at the 886. And if I draw that in, I'm just going to highlight it here. 886 is right there. Actually, right exactly where I drew the bat pattern completion at. And those of you who think that, I got some kind of like special gift for this, I've just been doing it for a long time, so I can kind of ID this stuff. But the market is basically closed right at the completion on the 4-hour. We violated it just a little bit. Our stops are below X here, and I don't think that I actually have it on this machine. I don't have my actual order in here. But my stops are below X here. They're somewhere around 103.75s, I believe. 103.75s, if I remember right. I typically do a pretty good job of remembering that stuff. But we've come down in here, and we're looking for the market to rally and potentially take our profits off at the 382 at 104.77s, and the second one coming in at the 618 at around 105.23s. And so that's what we're going to be looking for this market to rally. Now, I don't know if it will or not, but certainly if we take a look at the underlying trend of the market, the underlying trend here has been up. We've been up, 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 up. And so as we take a look at this, the market has found a nice area. It's one of the few markets here that's consolidating at all, and we've been able to pull one good trade out and potentially two as we continue higher. So it'll be interesting to see over the next couple of days what ends up happening with this particular trade. But this is really the one pattern trade that I've got for you guys this week to kind of show you. And I've taken some extra time to walk through the ratios because I have a little bit extra time this week. If we start looking through the rest of the market here, and I'm just going to bump out to the daily chart so you can see just how significant the moves have been. Now right here we violated structure on the pound dollar, looking pound dollar on the daily at 105.40s. We violated support there, and we're now trading within a range. We probably dipped down to 57.17s. That's going to be the next area because you can kind of see there's resistance, there's support, there's resistance. There's just a little bit of structure back here that we're gonna want to be concerned with as the market pulls down into 157.17s. But we have violated. This shows a significant shift in trend. So 2618 traders, okay, this is your opportunity. Guys who are looking for trend continuation trades, this is your opportunity. Lots of stuff happening here in a potential trend shift on the pound. Looking at Canada, Canada has been just on a tirade straight north over the last several days. I identified these double bottoms to you guys several weeks back. I mean, it would have to be weeks back. This was back in early January. January 10th was where we would have identified the support level, and the market's just taken off from there. Now, ignore these double candles. This is actually just one candle. They've repeated the candle here, so it wasn't 2 days. This is just 1 day. But the market has violated this support level. We have closed above it. Okay, we're looking at this. We have closed above the highs, the initial highs that came in here. Right there, the market pulled back off. We've closed above that. So we're now looking for some potential trend continuation here out of this trade, and there's a long way to run. I mean, we could potentially go to 104s, basically. There's a lot of distance to run, but we would expect a pullback in here somewhere. But basically, what I'm saying is there's very little to trade here. We can bring in our Fibonacci extension, and when I say there's very little to trade, I mean in terms of ratio and pattern recognition. There's very little to trade here. So we pull this up. The 127 extension is really the next potential stopping point. There isn't a whole lot of structure there, so it's not something that I would really concern myself with. You do have, if I bring this down in, I'm going to bring in the 50% retracement here of this entire leg. So what I'm looking at, guys, if you missed this, is I'm looking at this leg of the move right here. And now the market has made a 50% retracement. And now we're pulling back down into roughly another 50% retracement. Potential here, we may rally into an 886. Let me grab the 886 here. I'm going to drop that in. Could press up into an 886. This would give us a kind of an ugly bat. Okay? And then again, you've got structure just above that, so you want to have your stops above those highs. So this could be a potential good trade setup here on this, again, on the daily chart. So it's higher time frame stuff. But again, the Forex market preview is really not only about giving you some trading opportunities, but teaching you process. So looking at Canada, it looks directional to me. Looking at the euro, we're directional again. We're right up against previous highs here. The question is, are we going to see continuation or are we going to see a reversal? We're not overbought at this time. And so again, I'm looking at this thing and I'm like, look, this is a directional trade. Everything about this says we're going directional. There's no consolidation here. Looking at the yen, I don't need to tell you guys about the yen. I got stopped out on a couple of trades trading yen pairs this month. It's just been straight north. Looking at EURUSD, we just came off a winner of a bat pattern here. Market hit both of our targets, now has rallied up, and we're looking at, again, trend continuation here off a break above these highs. Euro pound, directional. Euro yen, directional. I mean, look at this. It's like a vertical movement on these yen pairs. Euro New Zealand. Looking for a potential trade setup here that still hasn't happened yet on the daily chart. Point being with all of this, well, let me just continue on with what I'm doing here. Pound Aussie. Market broke structure, breaking below the lows here. Now we're coming back up. Look for 152's even handle for potential shorting opportunities. This is going to be about a 382 retracement here. Come on. Boom. Yep. About a 382. Back up into 152's area for potential trend continuation trade. Pound yen. Again, now we're seeing some consolidation here. It's going to be interesting to see what happens when the market does this. If we break out to the high side here, I think this market's gone. We have had just a straight vertical movement. Now the market's consolidated. If we go high, if we break out to the upside here, I think we're looking at, another leg up. Now let me see if I drop down to a 4-hour chart. Yeah, man, it's just, let me realign this a little bit. Well, that's pretty stinking good. Nice little channel here. So we'll have to see what happens with it if we end up breaking out to the upside. Either way, there's going to be a trade here. If this thing goes higher, you can play just a channel breakout. If it goes lower, you can play a channel breakout to the downside. So bottom line is, it's been totally directional. This has not given us any pattern formation during the consolidation. So now we wait. And that was, pound Swissy. We can go to the Swissy if we want to. I'm not real excited with the Swissy with what they're doing with their currency. It makes for some erratic price action. So I've stayed away from the Swissy pairs. But if you trade them, it's there's breakouts here. So all of these are breaking out directionally. What does that mean for ratio and pattern traders? Well, what it means is that opportunities are limited. That when the market breaks out into trend and you're a consolidation pattern trader, you're going to lose money. And that has been the mark this month for most of the traders that I've been talking to in my little network of ratio traders. Is that everybody is just seeing, really, really tough trading. And that happens. There's no reason to get too bent out of shape about it. If you know the market's gone directional, dial back your position sizing. You're going to continue to look for opportunities. Expansion leads to contraction and vice versa. So don't get too spun out of shape about it. I really find these markets interesting. Yeah, I love making money, but the fact is that if the market is consolidating and you're in a position or the market is expanding and we're having, these lots of really wicked price action, and you're not really sure what's going on, and every day you're coming to the market, and it's an adventure, and that's one of the things that I really like about the market. So maybe I'm a little twisted, but anyway, what I'm getting at as I ramble on here is that there are just very few ratio opportunities here, and so we're going to take the ones that present themselves, like the bat pattern here on Aussie dollar. And the rest of them we're going to sit on, and we're going to take our licks because we know that as the market moves into consolidation, we're going to see more opportunities. And one of the things that is unique about, for example, the portfolio alerts, and I'm going to do a little bit of training on this. I'm going to do a video on this because I think it's an excellent excellent exercise in psychology, is that we had at the beginning part of this month, we had about a 900 pips of profit was made in the first 15 days of the trading year this year on our portfolio. And so I sent out an email letting everybody know about it. A lot of people sign up, and then we went into a drawdown, and we basically gave back virtually all of it. I think we did give back all of it, and it was, I mean, I was talking with Scott on the phone, and Scott's a machine. He's the guy who runs our portfolio for us, and he's a machine. He's just like, it'll come back, man. He's like, we you take it, you take the signals, and the signals pay. And I'm talking to him, and I'm like, man, we just had all these people sign up. I thought we'd get a little bit. Hopefully we'd finish off with a good month. He's like, you just got to take the signals. I said, you're right, man. I mean, continue to do it. Go forward, go forth and prosper. And we went from basically being a little negative to coming back now towards the end of the month here, and up 500 pips, 600 pips. I don't know where we've actually closed in position profit. I think it's somewhere close to 600 pips now. But it was wild, just it is an atypical month. It is not a typical month for the portfolios. We don't normally see that. But for the traders who took all the trades, who followed the plan, although we had an atypical month in terms of equity swing, they're going to come out on top. Whereas those traders who took the drawdown, decided they didn't want to be involved with it, didn't stop taking the trades, or said, I need to take a step back here, this isn't working, I'm not sure what to do, and they don't follow the plan, they don't make money. And so this is not a knock to anybody. Please don't send me emails telling me, yeah, but. I'm not making any sort of prophecy about you or making any judgments of you. I know that each individual person's situation is different. What I am saying is that a system only works if you follow the plan. And when it comes to ratio and pattern trading, there are going to be times when the patterns just don't. When the market breaks out into trend, you are banking on this market not violating this support level right here. You're banking on it. You're saying this market is going to stay in consolidation, that we're not going to violate these highs. And that when the market does this, it presents you a wealth of opportunity. But when it doesn't, you're going to lose big. And you just have to take the good with the bad. And I'm gonna talk about that in a training video. I'll try and find a fun way to do it. I hope you guys all got the fun training video I sent out this week, because I was going through the archives and I found that one and it was really good. If not, just go to the website and you can check it out, tradeempowered.com, or you're on it now if you're watching this video. But anyway, so sorry guys, I guess sorry. I don't have much else to show you, and this video I'm sure has gone on too long, so I'm going to go ahead and let you guys go, and I'll talk to you guys again next week. Until then, trade empowered, live abundant. My name's Jason, and I'll talk to you soon.